Welcome back all to Tech Tune-Up. I'm your host as always, Paul Meeks. I'm with Freedom Capital Markets, where first and foremost, I cover tech stocks, but within that, I cover AI infrastructure plays in the near term, and down the road as they become more mature, plan to cover quantum computing stocks. I'm brought to you as always here on their YouTube channel by my friends at Benzinga. Please, 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 like I do, consider those Benzinga Pro Tools. So as you know, what we do is we get right after it. I'm not here to regurgitate news. I want to hit the top tech news of the past week, but also what are the knock-on effects for those companies, their suppliers, their customers, and their other constituents. So let's get right after today. Another week, another slew, and I mean a slew, of announcements from OpenAI. Now, to put this in perspective, OpenAI, I think, is at some point, maybe not yet, but at some point going to be pretty desperate to show the fruits of their labor with all this AI infrastructure building spending. So what they're trying to do, because they've told us that when they're said and done, their organization, which is now only a privately held firm, is going to spend all in $1 trillion on this new paradigm. So they're looking for revenue, they're looking for profits, they're looking for cash flow, at least eventually. So they've announced what I think is pretty interesting, a video generation app called Sora 2, second generation. I actually think this one has a pretty good chance of being something big, because it looks to me like they're trying to emulate TikTok. Now, TikTok is in flux. We know that the Trump administration, on their own, announced a partnership with China for the U.S. to take over the U.S. operations of TikTok. But noticeably absent at that event were the Chinese. And it usually takes two to tango. So I don't know what's happening there, because we have a one-sided announcement. Quite bizarre. But I do think that this could be an opening with Sora 2 for OpenAI. The other thing that they've been pushing, and they had a developers conference yesterday, so that's where we got a lot of this news, is they want to go after the enterprise resource planning software companies of the 90s. Think of companies like Salesforce.com, Workday, ServiceNow, some of these companies that even in their space, some I admire more than others. In the past, I have made the claim, and I stick with it, with the legacy ERP companies, focus on, at least as we get into the AI era, ServiceNow and the German company SAP, and maybe even Oracle, not because I give a shit about their software or if it's going to be AI ready, but they have Oracle cloud infrastructure. So they have a big cloud hosting business that obviously is going to be propelled by the continued AI infrastructure spending. So let's move on to the next one, which is BlackRock. Why is Meeks talking about the world's largest money manager? Well, the AI infrastructure trade is apace because BlackRock has joined a consortium to buy aligned data centers for $20 billion. In and of itself, with a Goliath like BlackRock, they manage over $1 trillion. This is not that big of a deal, but it goes to show you the government is spending on AI. Private companies that are the obvious contenders, like the hyperscalers, like an Amazon and Alphabet and Meta, they're spending. But now we have private equity firms, private credit firms, and the world's largest money manager getting in on the action. Some people would say, if you're a contrarian, if you're a bear, that all this money flooding in has raised a red flag that it could end badly, just like the internet bubble popped 2000, 2001. So next I want to talk about Anthropic. Anthropic, with its cloud large language model, its chatbot, is one of the largest most successful, and when they go public, will be a IPO home run. This is a company that does AI privately held. They announced one of the biggest AI rollouts, one of the biggest AI proof points, because Deloitte, the worldwide consulting firm that has 460,000 employees around the globe, are going to roll out Claude, which is Anthropic's AI leading product. If that's not a use case, if that is not some transaction on the other end of the pipe after all this AI infrastructure build, I don't know what is. Next, we have JP Morgan. You may have heard this. I thought it was very significant. JP Morgan, United States' largest bank by total assets by far. Their CEO, Jamie Dimon, walks on water. Every time he says something, everybody's scrambling to hear. Their chief technology officer has said this firm, which is the best regarded in all of finance, is going to be fundamentally rewired for AI. That is not hearsay. That is a direct quote. So I guess another important data point in favor of AI from a really big, strong, credible source. So next, this is very interesting, App 11. So a week ago we met, September 30th. I said, because I've been in this stock for a long time and it's been an absolute home run, I said to trim it above 650. Well, believe it or not, that day, actually the 29th of September, the stock intraday got to $746. Stock continued to rise over the past week. But yesterday, the SEC announced, and the company was forced to say, yeah, it's live, that they are going to investigate some of the business practices of App 11. Remember, we bought App 11 at the very beginning of 2025 because the short sellers were pissing on it and the stock got trounced. So what's happened is, since then, Standard & Poor's, who puts together the S&P 500 index, looked into these short sellers' accusations from back in February and obviously found that they were cool with them, or they were false accusations because they ended up putting App a couple weeks ago into the S&P 500 index. But we do have the SEC looking, and this is much more serious. But from my understanding, they are looking at the very same charges that were brought by the short sellers in February. So what happens? Well, first of all, SEC investigations, even if they prove you wrong, typically are just fines and not even substantial fines. And this is a company that generates a lot of cash flow, so that wouldn't even be relevant. What is more relevant is if in any settlement, and I'm not saying that they're going to be found guilty at all, they may have to tweak their business practices, and how much they change their business practices for an analyst like me, who is very interested in how they're positioned in the market and how they'll continue to be positioned, that rattles my cage a little bit. So if you listened to me last week, hopefully you trimmed some between 650 and 750, which is where it's been in the last week. Now it's on a big downdraft because of this SEC investigation. I cannot tell you how it's going to end up, but if the stock continues to drop, and it's had a little bit of a rebound today, I probably, the contrarian in me, will buy it back just like I bought it when these very same accusations surfaced in February of 2025. Very interesting story. That's why you got to watch Tech Tune Up with Paul Meeks, because I am tactical, and we did make the call just last week to sell it above 650. It immediately goes to 750, and then it plunged on this SEC deal. CoreWeave is another company that I look at very carefully. Remember, last week I said trim it above 150. Now, over the past week, we didn't quite get there. I think the highest it's been intraday the past week is 146. So we got pretty close. But I would tell you, a lot of very positive information on AI infrastructure build. CoreWeave should be a beneficiary, though I'm a little bit more suspect long term if they are going to get the ROI out of all these investments. And so I stick with my guns. Here is CoreWeave that I bought in the 40s when it was a privately held firm. If that stock gets to 150, regardless of what I say, regardless of what's happening on that particular day, I still think you should trim it. Just no matter what happens, hold your nose and trim it. It's just a little bit more suspect to me. So those are my continued thoughts on the two biggies on the Meeks buy list. Perplexity AI continues to be very interesting to me. And I told you that Anthropic is making a big play. Perplexity AI is making a big play specifically with their Comet AI browser. And what happens if your AI browser at some point, it won't be in the near term, it won't even be in the intermediate term, but what happens if it supplants Chrome on Google? This could be a huge opportunity for Perplexity AI and its like, and a big threat, frankly, to Google. So next, I talked a little bit last week. There are some rumors not yet confirmed by the government, but the government of the United States obviously is pushing this. It looks like AMD might be Intel's first important outsourcing customer. And that would be great for Intel. I don't think AMD gets anything out of it except for just kissing Trump's ass. But AMD has been in the news, not only this particular transaction, but they announced their own deal with OpenAI, where over a number of years, they are going to supply 6 gigawatts of GPUs. And when you think about this, 1 gigawatt of GPUs typically costs the purchaser about $10 billion. And AMD says that this is going to be day one accretive to earnings, which is good, and that they expect over the course of the contract that it's going to add tens of billions of revenue. Well, that helps you kind of go with my barometer, 10 billion per gigawatt, 6 gigawatts, 60 billion. But anyway, it's very interesting because OpenAI has already received a $100 billion investment from Nvidia. And now they're turning around and they're getting into bed with AMD. And so now you have AMD and Nvidia, arch rivals, working with OpenAI. I wonder if Nvidia heard about this deal before OpenAI and AMD announced it. It's obviously at some point going to be a conflict. We'll have to see what happens. Continue to like Alibaba as my one and only Chinese play. I think the announcement from Cerebras, which is a privately held semiconductor company that is trying to come up with a better mousetrap versus NVIDIA's products. This might actually be a warning sign for the AI infrastructure building trade, because at one point, this company was going to be a very hot IPO, no doubt. But now, last week, they pulled the plug on their IPO and they're not going to do it. So there could be good news, bad news. What the CEO says in defense when questioned by the financial media is, since we filed our prospectus for our IPO, our business model has changed, so we have to rewrite it and we'll be back to you. I believe it or I don't. But anyway, an important news item nonetheless. And the last thing today I want to talk on the stock side is Dell and Autodesk are having analyst days. Autodesk is reacting negatively to its analyst day, but Dell is soaring. At least I took a look this morning, it was up 5%. But what Dell is telling us, and remember, they make servers that go into AI data centers, so they're a beneficiary of the AI infrastructure building trade. But what they've told us is, for the long term, so this isn't this year's guidance, for the long term, they're taking their compounded annual growth rate of revenue target from 3 to 4% per annum to 7 to 9. And they're taking their EPS growth target from 8% per annum to 15. So today, even though this hasn't been a fast growth company, today they are doubling their outlook for several years for both revenue and earnings per share. And that is not coming from selling old school PCs to you and me. This is coming from orders that they see, confidence that they see in the outlook for a ton of people, firms here and abroad buying AI data centers because they have a voracious demand for the continuing of the building of those AI data centers, as we also saw with the AMD OpenAI news. So I thought that was actually very interesting. And Dell is a stock I've held before. It's the only one I really trust in that space. The stock had a 150 price target on the street, and today it's over that. Obviously, with this news, the numbers from Wall Street analysts will go up for revenue and EPS. They will also, no doubt, take up their price target. I have to consider with my own model if after this move it's worth it to get back in. I think I'm probably going to say yes, but I haven't decided yet. So now let's get to our buy and sell list. Hey, you guys, not to confuse you, but I do have a couple of changes this week. I would say that Meta here, Meta, I'm a little bit worried about. That's why I've had it marked yellow, which is on my bullpen, my watch list. But I tell you, if Meta continues to erode in price and it finds some sort of support around its 200-day moving average, which is 666, the devil's number, I would tell you, nothing is wrong at Meta. Over the long term, they will continue to kick ass. And I will tell you that if we get down to that level, 666, 200-day moving average support, I'm probably buying it with both hands. So that's one thought. Other things that I consider doing, at least recently, Netflix. Netflix is one I'm also circling up. I would like to see it test successfully, mind you, its own 200-day moving average price, which would be $1,095 per share. So those are the big news items. I probably should have Dell at least on my watch list, but my sense is I'm inclined to lean into recommending that. But you guys, red means sell it, green means buy it, fresh money buy today, yellow is it's waiting in the bullpen. We can always pass along this list, but I don't just want to read stuff to you. Just want to focus on the stuff that I've changed, the tweaks I've made from last week to this week. So let's finish up as we always do before we get to potential questions with some tech trends. It looks to me that the Fed has locked in 2 more interest rate reductions at the final 2 meetings in 2025. The information that we're getting from the labor market points in that direction. And it looks like inflation, it's not benign. It's still sticky high, but I don't think that that is going to slow down the Fed in any way. So over time, depending on how many cuts we follow with in 26, that could hopefully create a wind at our back for tech and other aggressive growth investors. I think it's very interesting, this comment that was made by the premier of Taiwan. Taiwan is absolutely critical for us to manufacture semiconductors. Obviously, Taiwan Semiconductors, TSMC, the company is called. TSM is how it trades in the States, has been on the Meeks buy list successfully, making folks a lot of money for a lot of years. But what Trump is demanding, if you want to do business in the United States, you have to have a 1-to-1 relationship. For every dollar of semiconductor production and sales in your home country, you have to do $1 in the States. Ain't gonna happen. Not even technically feasible. Bonehead move. And obviously Taiwan, which is one of our allies, has said, we're not doing that. That's ridiculous. They've already committed to spend $300 billion to build fabs in the Phoenix, Arizona area. Don't expect a 1-to-1 relationship. That is just ludicrous. Next, I love following the CEO of Robinhood, who is a aggressive, sometimes pushes the limit, but a real innovator in fintech. one of the reasons that we've had Robinhood, again, successfully making people a lot of coin over the last 2 years or so on my buy list. But he is talking most recently. Remember last time he was talking about essentially getting in the gambling business so you can do a backdoor around the regulators, run around to be able to bet on NFL games. Well, today he's talking about, well, not today, this week, about how U.S. investors in the future, if they want exposure to foreign stocks and other foreign assets, that maybe they're not buying them, maybe they're buying tokens. So the tokenization of international trade. Wow, that could be big. Anyway, it sounds kind of crazy to me, but just thought I'd pass it on. It's another day. It's another comment from the flamboyant CEO of Robinhood, who in the past has backed up his comments. You know, everybody's been asking me about the government slowdown, now shutdown. Well, I'll tell you, even though you wouldn't think that it directly impacts my sector, the tech sector, I mean, this erodes confidence in both parties. And if I'm a CEO or a CFO of a company in the United States, tech company or otherwise, or a company that is a foreign company doing business in the United States, I'm probably, until this gets resolved and I have greater confidence and certainty, I'm probably holding off key decisions on hiring people, asset allocation, capital expenditures, R&D expenditures, because it's a damn mess. So when you see things like this, think of, how does this impact me, even indirectly? And I tell you guys, as investors, even as a tech investor, this impacts you truly, at least in a backhanded way. So one of the things I wanted to say is, I've told people over the last couple of weeks or months that I was going to a quantum computing conference in West Palm Beach, Florida tomorrow, October 8th. It's called Quantum Beach, and I really want to go, and I bought my ticket, and I've been talking to the guys there, and you guys know that I'm super interested in quantum computing as an investment theme, but something has come up at Freedom Capital Markets, the investment bank in New York for which I work, and so I'm not going to be at the conference. So hopefully, if somebody goes, because I've been pumping this thing, follow up with me afterwards and tell me what you learned, because super interested in quantum computing long term. So if you have any questions, let's get after them. Paul, thoughts on USAR? Did you mean to write Uber? USAR? Sorry, I don't know it. Maybe you're absolutely correct. Silver stocks. I don't follow those enough. I follow commodities as a macroeconomic indicator that bleeds into my microeconomic views on my sector, but I haven't had any play in commodities. Obviously, if you believe in inflation, and inflation still seems to be sticky high, regardless of what Fed and Trump would like to see, then you should have an allocation to commodities. So if you have it in your portfolio, I'm not opposed. I typically, when I want to gain that exposure, I just go through an ETF because I don't know enough about the individual companies, whether it be gold, silver, copper, or whatever. What do you think about the market dip reacting to Oracle's announcement? Well, this one's I can handle. I think what happened was, when the announcement was made, it looked like all roses. But I will tell you, when you think about it, first of all, there is going to be a really tough operational lift. You think about it, you have the algorithm for TikTok resting with you if this deal with the Chinese is done. The deal with OpenAI, this is one of the reasons why they changed CEOs, even though Safra Catz, the CEO, was well regarded and she'd been there a long time and presided over a lot of stock market value creation, is because they now have to get past the PR, the press releases, the announcements, and actually get to work. And all these announcements, which you think would be great, I'm questioning, one, how profitable they will be for Oracle in the end, and two, if they can pull it off operationally. because the requirements for what they're going to have to do are going to be unparalleled. And the money that they're going to have to spend on capital expenditures to prepare is going to take a company which used to generate a ton of free cash flow to free cash flow burn for a couple of years. So I might get back to Oracle, but it would have to tumble a lot further to get me interested, because I am a skeptic as much as optimistic about the latest announcement. All right, everybody. That's it for Tech Tune-Up for this week. I will see you next week. And of course, we have a couple of big things to talk about. Here we are on October 7th. In about 1 to 2 to 3 weeks' time, we get the flood of corporate earnings. We call this quarterly earnings season for us on Wall Street. I will be following all those companies and all their webinars and all my phones simultaneously, and I'll report back, because there will be market moving information in the tech sector. Until then, we'll see you next time.